Hello traders, this is Frank Paula from Forex Mentor speaking with you on Saturday, December 21st. By the time you probably get a hold of this video presentation, it's our last complimentary weekend video for the year for 2013. We'll be back at it as per usual in the new year. What I wanted to do today is just reference one of the two types of technical setups that we specify in the Forex News Breakout Trading course and methodology, which you can overlay on top of an expected market moving news response, and in this case trade profitably on New Zealand news, which came out on Wednesday of this week. I'll get to the particulars in just a minute. In case you've never seen one of these presentations profiling the Forex News Breakout Trading method, the best way to describe it is that it is rational in the sense that it is technical, not rational as in we apply some kind of logic that says if the news is good, the underlying currency is going to rally. Sometimes that happens. Just as often, if not more, it doesn't. So we are very clear to specify in our methodology that you can't sit there and try to analyze for yourself whether the news is good, bad, dovish, hawkish, bullish, bearish, from a fundamental perspective, because by the time you figured it out, half the time you're going to be wrong. The other half the time the move is just, it's taking off like a rocket. So you have to have something that's technical and anticipatory that allows you to stake a position before the news even hits. I know that is the most completely counterintuitive assertion that most people would expect somebody to make, but I can tell you that I have studied news responses, more different trade setups and news releases than I can count, going back over a period of a year, and all I can tell you is what I have found through extensive analysis, and that is you cannot count on indicators, you cannot count on clockwork logic. News is good, therefore it's going to rally. You cannot try to get into the trade after the fact. You can, sometimes you might even be successful, but way too often it's the case that if you're trying to get in after news hits, you're going to be too late and you won't even get a fill. Trust me on this, I know from experience. So we're looking for technical setups that occur before news even hits. This is all explained in a comprehensive online video course, also available in DVD format, presented over the course of 12 modules and 6 hours. I have been taken to task by a couple of people, not many, but a couple of people saying, basically, dude, you just talk way too long. There's just too much here. You're selling us War and Peace. Why don't you sell us a Harlequin romance instead? All I can say is that I understand that potential concern. I will always defer to the attitude of giving too much and explaining too thoroughly and comprehensively than just being superficial about it. So if you don't like all that information, I'm sorry, there's just no way around it that I can see. I want to provide you everything you need to know to apply the methodology with a very thorough and fundamental understanding, and so that's why we're taking the long road approach here, not just some quick little superficial off the hook kind of presentation. We also provide a resource-rich members-only online area, which provides regular, frequent content updates throughout the week relating to the current news environments. We have a performance tracking spreadsheet, which I'll show you in just a minute, and a blog feature, chart of the week feature, weekly trade recap videos, all sorts of stuff to keep you current. If you'd like to find out more, satisfy your curiosity, please visit us at www.forexmentor.com/FXNewsBreakout/index.php as shown here. That's our public page where you can find out more information. If you have remaining questions, you can always email me at any time via frank@forexmentor.com. I'd be glad to hear from you and address any questions you might have. Okay, what I'd like to do now is just quickly show you one information resource that's available in our members area. In fact, this summary page is available on our public page as well. There's a starburst graphic that you click and it brings you this monthly summary. Now, one thing I have to be very upfront about here, the methodology that we teach only gets you into a tradable news scenario about 30% of the time. It varies. Some months it's more, some months it's slightly less. but this ratio here we found has remained remarkably consistent over time. Only about 30% of the scheduled market moving news items that might occur at any point during the week are going to set up in a technical way that we require in order to stake a position heading into news. And so I mention that because patience and discipline is an absolute must with this methodology. If you're just looking for something that finds you little scalp moves all day long, this isn't going to do it for you. But then again, our methodology is not a scalping methodology either. We're always looking for at least 50 pips. That's the minimum benchmark for profit that we look for here. But we have a month-over-month summary which breaks down into a more detailed performance tracking, and as you might be able to glean here, and I apologize for the resolution, I can't fit everything on one screen easily, but I hope what this conveys is that we also provide the detail for each and every trade, and it's not just, you know, time in, time out, pair traded news. We also provide some extensive qualitative commentary here in this column towards the middle, where we describe the setup confluence, whether it was tradable, whether for a win or a loss or a break even. And so that gives you some additional information that you can use to reference the setup on your own price charts and see if you found the same things that we saw heading into news, as well as the detailed news event by event results that were attainable. And what we're showing here is that since the inception of our performance tracking, June 1st, 2013, we've had 254 news events considered market moving, of which 73 were tradable, 51 wins, 12 losses, 10 break-evens, for a win-loss ratio excluding break-evens of 81%, net profit of 3,063 pips. And that's undivided, right? That is a single lot basis. So we're not actually, you know, trading half that and pretending it's more. It's actually 3,063 pips on a single lot basis for average profit per win of 60 pips per trade. So that resource is available to you, and it supplements nicely our blog feature, which doesn't specifically provide commentary for every single news item, but certainly those that generated an actionable trade setup, and those that are considered more newsworthy in our blog feature. We also do a weekly trade recap feature which goes over a setup. This week we showed you one that wasn't actually tradable, so it's not just cherry-picked examples that say, oh, here we go again, win, win, win. This week we showed a setup for Euro-US which wasn't actually tradable because there was no setup. And so we're very clear about that and show it. Okay, so we're not just cherry-picking our examples, we're showing you real examples all the way through. Okay, there's enough of that. What I'd like to do now is just quickly reference a pattern setup here, and I'm not going to go through a big comprehensive top-down analysis. What I'm going to show you here is a pattern setup, one of two types. This one is a continuation setup, specifically a downtrend continuation, heading into market moving news for the New Zealand US pair at 9:45 p.m. GMT, Wednesday, December 18th. And what we're basically looking for here is that heading into news, we have a prominent swing point high, in this case for 7:30 p.m. GMT at 82.88, an impulse wave down to a swing point low for 8:45 p.m. GMT at 81.98, just about the 8200 round number handle, followed by what looks like a retracement up from that swing point low, and we're looking for that retracement heading into news to specifically run its course at the time that news is released or a few moments thereafter. And it's always about support resistance, whether this type of pattern or our type 2 pattern, which is actually more specifically support resistance, but we're looking for a reaction, in this case against resistance, on this low level time frame. So this is the last 15-minute bar prior to news. Where are we looking for a reaction to happen to end this retracement? I would contend that the round number handle of 82.50 overlapping hourly broken support as resistance and the 61.8% Fibonacci retracement is a logical place to put your limit entry in. Price spiked up. Okay, so I just had to hit the pause button there, and so I'm just regrouping, picking up where I left off. So we had a limit entry placed at this confluence of resistance factors at 82.52, close enough to a whole bunch of things going on there as mentioned. Now there was a little bit of a drawdown on the news spike to the tune of about 10 pips, and if you're putting it on at market with presumably about a 3-pip dealing spread, it would have been closer to 13 pips, which is awfully close to the 15-pip generic protective stop that we work with. But fortunately, that was a fairly short-lived drawdown, and price subsequently headed in the expected direction for a downtrend continuation pattern. And putting a limit exit at 8,200 here really made sense because it was a couple of pips shy of support on the 15-minute chart right here at 81.93. And there are often, even if just short-lived reactions on round number levels, we know that. And sure enough, there was one here. Now, it wasn't enough to scuttle the trade, but we couldn't have known that in advance. And so it kind of made sense to book a quick 52 pips profit here. So the whole trade was finished inside of an hour, less than in fact. And price subsequently went sideways for quite a number of hours, further demonstrating why it was good to be out, even though much later the market trended down even further. So this isn't a very comprehensive analysis I'm giving you. We're not looking at market flow analysis. We're not looking at top-down time frames. Those are all important factors. But I just wanted to reference one of the two types of technical patterns, and we have to see one of these patterns setting up into news, very clearly delineated, no less than 15 to 30 minutes minimum heading into news. And in this case, we had an impulse wave down, a swing high to a swing low, a retracement up from that swing low, expected to run its course at whatever is the clearest confluence of resistance, and I would suggest 82.52 was exactly that, into a continuation pattern with a limit exit never less than 50 pips. And if we have good reason to expect a more compelling target on one of the higher time frames, typically, then we'll go for it. If there's a good reason to expect a move that'll cover 100 pips, we'll go for it. In this case, I don't know that there was. But this was a nice quick little 50 pip profit with risk of 15 pips for reward to risk in excess of 3 to 1. I would contend there's no holy grail, but the closest you can come to that in trading is insisting upon high reward to risk. That will ensure that your winning trades pay for your losing trades. You're always going to have a losing trade, at least here and there. I just can't imagine a scenario where somebody never has a losing trade. I just don't think it's possible. So you want to have the psychological confidence that your winners are going to pay for your losers and leave residual profit on the table, and that's why we insist upon high reward to risk with this methodology, which was delivered here on the short trade for the Kiwi US pair on Market Moving News, 9:45 p.m. GMT, Wednesday, December 18th. With that, I'll leave it there for now. I'd like to thank you for joining us today, and I'd like to wish you and yours the very best for the holiday season. And if we don't connect before then, also Happy New Year. I hope that 2014 brings you much trading success. Please do feel free to contact me anytime via frank@forexmentor.com if you require more information about this methodology. With that, I'll leave it there for today. Again, happy holidays, and we'll talk to you again soon. Bye for now.